Hello viewers, welcome to my channel. I'm Hasham. Now I'm continuing the next problem on income from other sources. Already 7 problems I have explained you in detail in the previous videos. Now 8, 9, 10, these 3 problems I am going to explain you in this video. So if you want the complete command, keep a rhythm of watching all the videos from beginning till the end. Don't skip in between and don't join in between. If you do this, then definitely you cannot be able to understand this subject of income tax. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject income tax 1 for the assessment year 2021, select the topic income from other sources, watch the introduction part, then starting 1, 2, 3 videos, definitely you can be able to follow it. So otherwise it will be very difficult for you to understand if you join in between. So I have explained you the provisions how to compute the income from other sources according to the provisions of Income Tax Act for the assessment year 2021. So already 7 problems I have completed. Now I am reading out the 8th problem. Before that, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep a hard copy printout ready before watching the problems. Now 8th problem, see carefully. Sri Raghu furnished the following particulars of his income for the previous year ended 31st March 2020. Determine income chargeable under the income from other sources for the current assessment year 2021. First one, rent from subletting of plant and machinery 40,800. The rent from subletting is chargeable to tax under income from other sources. So any expenditure incurred on this subletting of plant and machinery will be allowed as reduction. So here 6th point it is given, repairs to plant let out 500, insurance to machinery 850. So these 2 deductions are allowed. So you can see here computation of income from other sources of Sri Raghu for the assessment year. Rent from subletting of plant and machinery 40,800. From this, deductions will be allowed for expenditure incurred to earn this income. So what are the expenditure? Repairs to plant let out, insurance of machinery, that will be deducted. So the net income from rent from subletting is 39,450. Next one, dividend from shares of Akai Company Japan net 8,750 and dividend from shares of foreign country 14,680. Already in the previous videos I have explained you the provisions regarding the taxability of dividend. The dividend received from Indian companies are exempted, whereas dividend received from foreign companies are taxable under the head income from other sources. So here dividends are received from Akai Company Japan, it is taxable. Dividend from Akai Company Japan 8,750. Similarly, dividend received from foreign company, it is taxable. So both are taxable under that income from other sources. Winning from lottery, net amount is given 70,000, TDS is 30,000. Tax deducted at source. So net amount 70,000 after deducting TDS of 30,000. But Income Tax Act says we should take the winning from lottery gross amount, not net amount. So whatever TDS is there, that TDS will be added back to the winning. So 70,000 plus 30,000, 1 lakh rupees is the gross winning from lottery that should be taken. So winning from lottery net amount, add TDS, 1 lakh rupees gross. Next amount, rent from letting of open land. Suppose if open land is let out, the rent received from open land is taxable under income from other sources. So rent from open land 25,000. Repairs to plant let out, already we have taken the deduction. Then rupees 1,50,000, 18% less tax debentures of Tata Company Limited. So he is having interest on securities. So we'll take the head of income, interest on securities. So how much security? 1,50,000, 18% less tax. Less tax means only one step we can get the gross interest. Gross interest is equal to face value into rate by 100. So here I have taken 1,50,000, 18% less tax debentures of Tata Company. Right? So it is a less tax, so only in one step we'll get the gross interest. So GI is equal to face value 1,50,000 into 18 by 100. 27,000 is the gross interest. Second one, rupees 40,000 interest on tax-free debentures of mining company limited. Here the security value is not given, directly interest is given. So instead of security value, here security value was given, so we have calculated the interest. But second one, interest amount itself is given. Interest amount is given. When interest amount is given, it is the net interest. It's a less tax security. It's a tax-free security. It's a tax-free commercial security. When tax-free commercial security interest amount is given, it is the net interest. We have to gross it up. So how to gross it up? Multiply 100 by 90. Net interest into 100 by 90. So 40,000 into 100 by 90, you will get 44,444. Now add up to 71,444 is the gross interest. From this, collection charges, last item is given, interest collection charges 1500. So under section 57, interest collection charges will be allowed as deduction. So deduction allowed 1,500. So 69,944 is the interest on securities. Now take the total of the interest on security. The total income from other sources are 2,57,824. One last item is given, lottery ticket purchased worth rupees 2,000. For getting this winning from lottery, he has purchased lottery tickets, but Income Tax Act says lottery ticket purchased will not be allowed as deduction. So in examination, in working note, you should write that sentence, that lottery ticket purchased will not be allowed as deduction from winning from lottery, right? Winning from lottery is directly taxable. No deduction will be given for purchase of tickets. That you should write it in working notes. So this is the complete explanation about problem number 8. Now I am coming to problem number 9. Srimati Rani's investments are as under. Find out the taxable income from interest on security for the current assessment year. So see here, computation of income from interest on security of Srimati Rani for the assessment year. Now one by one we'll take. 40,000 rupees, 40,000, 15% Haryana government loan. So when nothing is given, we have to assume it as less tax. It is a less tax security. When it is a less tax security for government or commercial, only one step. When the security is less tax for all the security, whether government security or commercial security, face value into rate by 100. So what is the face value? 40,000 into 15 by 100. 40,000 15 by 100, 6,000. Because it is a less tax, so one step we can calculate the gross interest. Secondly, 20,000, 12.5% municipal bonds. Again it is a less tax. Nothing is given, so less tax. When less tax, only one step. GI is equal to face value into rate by 100. So 20,000 into 12.5 by 100, 2,500. Two securities completed. Third security, rupees 30,000, 8% NRI bonds of SBI. In the last introduction video, I have given the examples of exempted security. Under that category of exempted security, this item will come NRI bonds issued by SBI, State Bank of India. So it is exempted from tax security. The interest is not taxable. So here 30,000, 8% NRI bonds of SBI fully exempted from tax security. Next one is rupees 80,000, 16% second debentures of a limited company. So again, nothing is given, it's a less tax. So one step, GI is equal to face value into rate by 100. 80,000 into 16 by 100, 12,800. Next item, 40,000 rupees, 16% cumulative preference shares of a limited company. Preference shares are not securities. Shares are not security. Security means bonds issued by government and debentures issued by companies. So under security comes only two things, bonds and debentures. Shares are not securities. So in dividend on shares will not come under interest on security. And secondly, dividend on shares are fully exempted from tax. So this item, cumulative preference shares, will not come in our computation. In working note, you should write down. Preference shares are not security. So dividend received on preference shares are exempted from tax. So gross interest we got 21,300. Now the collection charges amount to 225 and interest she paid 1250 as interest on loan taken to purchase municipal bonds. For purchasing these municipal bonds, the SSC has taken a loan from bank and interest is paid on that loan. The Income Tax Act says interest paid on loan taken will be allowed as deduction. So here 1,250 allowed. So total deduction 1,475. Subtract 1,475. Income from interest on security 19,825. That's it. This is the end of problem number 9. Now see the problem number 10. The following are the incomes received by Mr. Kalyan Gupta during the previous year. Here rupees 30,000 interest on Nagpur Municipal Corporation bond. One new point in this problem is security value is not given and rate of interest is not given, but directly interest amount is given. Directly interest, first time we are coming across this situation where security value and rate of interest is not given, interest amount is given. So when interest amount is given, the interest may be net interest or the interest may be gross interest. If gross interest is there, directly we'll take. If it is a net interest, we will gross it up by multiplying 100 by 90. If the interest is net interest, then we have to multiply 100 by 90. If it is a gross interest, directly we'll take it. How to find out net interest or gross interest? I'll explain now. First item, rupees 30,000 interest on Nagpur Municipal Corporation bond. In the previous video introduction, I have given the list of exempted securities. List of exempted from tax security. In that exempted security, this item has appeared, that Nagpur Municipal Corporation bond. So interest on this Nagpur Municipal Corporation bond is fully exempted from tax. That point you have to remember. That's why I'm saying again and again, before watching this problem video, you have to watch the introduction part, theoretical part. Then only you can be able to understand. So interest on Nagpur Municipal Corporation bond is fully exempted from tax. So here I have taken computation of income from other source of Mr. Kalyan Gupta for the assessment year. Rupees 30,000 interest on Nagpur Municipal Corporation bond fully exempted from tax. Put a dash. Second item. Rupees 11,500 interest on 12-year National Saving Plan certificate. So interest on National Saving Plan certificate is fully exempted from tax. So 11,500 interest on 12-year National Saving Plan certificate fully exempted. The first two securities are fully exempted. Which are the two? Nagpur Municipal Corporation bond and 12-year National Savings certificate. Both are fully exempted. So put a dash. Next, third one. Rupees 21,000 interest on tax-free Indian government security. Now see, it is a tax-free government security. Interest amount is given. So note down one point. Write it down itself. Any interest received, whether it is tax-free government security or less tax government security, the interest received is the gross interest. No need to round up. No need to gross up. No need to gross up if it is a government security, whether it is a less tax or tax free. So if the government security is there, irrespective less tax or tax free, interest received is the gross interest. So here interest 21,000 is the interest received. So same 21,000 I have taken in the outer column. So 21,000 interest on tax free government security. Next one, rupees 33,600 tax free debentures of PQR Limited. So tax-free debentures of PQR Limited means commercial. It is the tax-free commercial security. So the interest received is the net interest. Tax-free commercial security, interest amount given is the net interest amount. Now we have to gross it up. Now we have to gross it up. So net interest amount is 33,600. So 33,600 into 100 by 90. 33,600 into 100 by 90. 37,333. Next one, rupees 40,800 interest on MP government loan. Rupees 40,800 on MP government loan. So any government security, whether less tax or tax free, just now I told you interest received is the gross interest. अगर कोई गवर्नमेंट सिक्योरिटी है तो चाहे वो टैक्स फ्री हो या लेस टैक्स हो, interest received is the gross interest. That's why. So here directly I have taken 40,800. Next, 40,000 interest on tax free debenture of a mining company. So here tax free of a mining company. Mining company means commercial. So it's a tax free commercial security. Interest received is the net interest. Now we have to gross it up. Multiply 100 by 90. So 40,000 into 100 by 90. 44,444. Then rupees 43,200 interest on debenture of a sugar company. Interest on debenture of a sugar company. It's a commercial security. When it is a commercial security, the interest received is the net interest. Now we have to gross up. Now we have to gross up. So 43,200 into 100 by 90. 48,000. Last item is dividend on preference shares. 15,000 dividend on preference shares. Just now in the previous problem I told you, preference shares are not securities. Not security, so it will not come under interest on security. Secondly, preference shares, in dividend on preference shares are fully exempted from tax. So this point you have to write it down in the working note, that dividend received on preference shares are exempted from tax. So we have taken all the interest. Now next paragraph. The bank realized the interest on all these securities for which they charge 2.5% on amount collected. So collection charges are 2.5% on amount collected. Next, compute the taxable income from interest on security and tax liability if income from other heads are 6,31,000 if the interest is due on 30th April and 31st October. So first of all, in this problem we have to calculate interest on security, and also we have to calculate a tax liability if income from other heads are 6,31,000. So first of all, we have computed the gross interest 1,91,577. From this, deduction under section 57, collection charges, 2.5% on amount collected. That amount collected we have to find out in working note. In working note, amount collected. See, first amount 30,000 interest on Nagpur Municipal Corporation bond. The interest is fully exempted. So no collection charges will be allowed on amount collected on this security. When security itself is exempted from tax, then collection charges will not be allowed on this interest received. Similarly, 11,500 interest received on 12-year National Saving Plan. This is a exempted security. So collection charges will not be allowed on the interest of this security also. So we should not take first two. Next, 21,000 interest on tax free. Here I have taken 21,000. Next, 33,600 collected. 33,600. Then 40,800 rupees collected. 40,800. 40,000 rupees interest on tax free debentures collected. So same 43,200. Last one, 43,200 is the interest on debenture. 43,200. Take the total collection. 1,76,600. So 1,76,600 is the actual interest collected by the bank. Actual interest collected by the bank. It is not saying 2.5% on gross interest. If in the problem it is given 2.5% on gross interest, we would have taken on this 1,97,577. In the earlier problem, it was given on gross interest. This problem, it is saying 2.5% on amount collected. That's why I am calculating on amount collected. So 4465 is the deduction. After deduction, interest on security 1,87,112. This is the interest on securities. Now we'll calculate the tax liability. So see here, computation of tax liability. Interest on security, we got 1,87,112. This is the interest on security. Income under other heads. Income under other heads are given in the problem 6,31,000. Take the total 8,18,112 is the total income. On this total income, we have to compute the tax liability. Now, income. First slab. The first slab is up to 2,50,000. Rate of tax nil, amount of tax nil. Basic exemption limit. The basic exemption limit 2,50,000. Nil, nil. Second slab is from 2,50,001 to 5 lakh. From 2,50,001 to 5 lakh. So 2,50,000 is the second slab. The rate of tax 5%. So 2,50,000 5%, 12,500. The third slab is from 5 lakh 1 to 10 lakh. But our income is not going up to 10 lakh. Our income is 8,18,112. The third slab will take the balancing figure. The third slab will take the balancing figure. So 8,18,112 minus 2,50,000 minus 2,50,000, you will get 3,18,112. This is the balancing figure, third slab. On this, 20% is the rate of tax, 63,622. So total tax will be 76,122. So tax on total income 76,122. Add health and education cess 4%. 3,045 is the health and education cess. So add up 79,167 is the tax liability, rounded off to 79,170. That's all. So we have calculated the interest on security, we have calculated the total income and tax liability in this problem. The new point in this problem is interest amounts are given. Security value is not given. Interest amount is given. So you have to remember when you have to gross it up and when you have not to gross it up. If government security is there, whether it is tax free or less tax, interest received is the gross interest. For commercial security, interest received is the net interest. You have to gross up by multiplying 100 by 90. That's it. So we have completed 10 problems on computing the income from other sources. So we'll continue the next problem in the next video. For the time being, give the comment on these lectures. Give a like, share it in your group, in your friend circle. And lastly, don't forget to subscribe the channel. We'll continue the next problem in the next video.